Good morning. This is Larry Edelson for my Uncommon Wisdom market video update for Thursday, February 17th. I just returned from southern Thailand, from Phuket, on holiday with my children, and I have, of course, been watching the market the entire time for you. So let me give you an update on what I see. Despite some of the wild movements over the last 5 to 10 trading days, or so, there's been no changes in any of the posture for the cycles that I've been talking to you about, or any of the impending cycle turns, or short-term, or intermediate, or even, of course, long-term trends. They all remain intact. There's been a lot of background noise in all markets, due mainly to the situation in Egypt and in other countries in the Middle East. And also we're seeing some uprising even begin in Italy. And all that is really background noise. It's not going to cause any changes in significant trends which are already embedded in cyclical nature of these markets. So let's go right to the gold chart. This is a gold chart here. Yes, gold did rally back to the 1370, 1375 level, as you can see here. I have told you previously that gold executed a monthly sell signal in January when it closed below the 1372 level. We are now simply rebounding to retest that breakdown of support, as you can see on this chart here. So I don't expect gold to do anything other than retest this area, and as you can see, there's a lot of white space, what I call white space, on the chart to the downside. The next significant move for gold will be back to its previous low of about 1300 in here, and then down to the 1225 level. I would only be wrong, and I would only rule out a decline in gold if we were to see it close solidly above the previous record high at 1428 and change. I do not expect that at all, so I would stay hedged up as I've recommended in my core gold holdings, and I would not be aggressively going long or adding to any gold positions at this point in time. Not until you see a breakout or you see a decline back down to new lows and you get a official flash alert from me for Real Wealth Report members. Let's take a look now at silver. Silver has rallied a little bit more than gold. I'll get this chart up for you here. And it is very close to new record highs. Silver could eke out a new record high, but I would not be buying silver here due to the cyclical reasons I cited previously, and the fact that silver actually, on a correction, has more downside than gold. So I would, continue to stay away from silver here, except for perhaps some longer-term silver small cap miners and explorers. I would not be buying silver bullion here. I would indeed be doing exactly the opposite, as I have done and recommended. I would be going short silver here, looking for a correction down to $22. Doesn't seem likely if you're watching the market, but believe me, the higher silver goes right now, the harder it's going to fall. And you'll just have to be patient on silver. I will not be recommending aggressive silver investments, physical or otherwise, until we see a solid correction in silver. Let me now take a look at the dollar index. Let's make sure that, excuse me there, get the dollar index up here. As you can see, the dollar index has largely been trading sideways. It has fallen back down a couple of weeks ago into the sideways trading range on the dollar index basis, 77 to 80 level. Overall, that's a sign of the long-term weakness in the dollar. Many have expected the dollar to rally. The only currency that the dollar is really rallying against at any time is largely the euro. The dollar remains weak against all currencies but the euro, and I expect it to continue to trade sideways. There will be no significant move in the dollar index overall until we get a solid close above 80 or a close below 77 on the nearby contract or spot contract for the dollar index. Now let's take a look at the Dow, which is also acting very interestingly, pretty much in keeping exactly what I've been forecasting for you. It has been eking out new record highs from the March 2009 lows, one sort of right after another. It is meandering in the 12.2, 12.3. We did get above 12, and we did eke up to 12,250. The maximum I see the Dow going is this red line here, which is crawling up to about 12,400 to 500 in the next few days. It's not certain that the Dow can get that high, but if it does, that will probably become the top, and I still recommend that you do not load up on stocks at this point until we see a solid correction in the Dow. So there's been no changes in any of my views, short, intermediate, or longer term, over the last week or so. Hold all positions that I've recommended in my Real Wealth Report, all hedges, and in my columns in Uncommon Wisdom, continue to follow my forecasts in that weekly column every Monday. Till next week, this is Larry. Have a good weekend.